You know, for what feels like forever, there was this one simple rule in investing. Just bet on U.S. stocks. Seemed like a no-brainer. But in 2025, that rule just shattered, and a lot of investors were left scratching their heads. So today, we are digging into the report that explains exactly what happened, and more importantly, the automated tools that were ready for this shift all along.
I mean, the strategy made sense, right? You had the US market just fueled by these unstoppable tech giants. It really felt like the only game in town. It was a winning formula, until suddenly it wasn't.
And boom, 2025 comes along and just flips that script completely. The S&P 500, it did okay, a respectable 6.2%, but international stocks, they just took off, returning an incredible 19.5%. This was a huge reversal and a massive wake-up call for anyone who wasn't thinking globally.
This kind of dramatic change really brings up a critical question for all of us, doesn't it? Were your investing tools ready for this? Was your portfolio actually built for a world where the US wasn't the one leading the pack?
Well, the answer, and this might be a little surprising, turned out to be the very platforms that people use to knock for having too much international exposure. Yep, robo-advisors. With their automatic, built-in global diversification, they were pretty much perfectly set up for this exact scenario.
So for anyone new to this, let's quickly break it down. A robo-advisor is basically an automated investment manager. You just tell it your goals, how much risk you're comfortable with, and its algorithms get to work, building and managing a diversified portfolio for you. They usually do this with low-cost funds, like ETFs that track entire market indexes. And David Goldstone, he's the author of the report we're pulling all this from. He just puts it perfectly. The tide turned. That diversification that might have felt like it was holding you back in other years, all of a sudden it became the absolute key to winning.
Okay, but the story doesn't just stop at diversification. The whole playbook for what a robo-advisor is being rewritten. They're moving way beyond their simple, passive roots and becoming, well, a lot more proactive.
Let's just look at this evolution side by side. The original robo, it was all about set it and forget it, right? Passive investing in a bunch of low-cost ETFs. But the modern robo, oh, it's a totally different animal. We're talking active management, we're talking individual stock picking, and even adding things like alternative assets, real estate or gold. So how's this actually playing out? Well, take Robinhood's new robo. It's adding a selection of 25 to 45 individual stocks. We're talking big names like Netflix right into the mix. Vanguard is now offering portfolios with actively managed funds from legendary firms like Wellington, and SoFi is branching out into those alternative investments. And to make that a little more real, in SoFi's portfolios, this might mean putting 2 to 5% into things like real estate or gold. The idea here is to get stock-like returns, but with the lower volatility you'd expect from bonds. It's just another smart layer of diversification. Okay, so all this evolution, it leads us right to the main event, the rankings. Every year, Barron teams up with Condor Capital to figure out who's doing it best. Let's see how they all stacked up this year.
So, after crunching all the numbers, looking at everything from performance and cost to features and customer experience, one platform really rose to the top.
And the winner is SoFi Automated Investing. So what was it that put SoFi on top? Well, according to the report, it was this really powerful combination of things. They had strong performance, they kept their fees low and competitive, they gave you access to actual human financial planners, and get this, you only needed $50 to get started. And looking at the full scoreboard here, you can see just how tight this race was. I mean, SoFi grabbed that top spot with a score of 82.17, but look how close Fidelity and Vanguard Personal Advisor were, right on their heels. Schwab and Wealthfront round out a super competitive top 5. Okay, an overall score is great and all, but let's be real. As an investor, what you really want to know is, how did my money actually grow? So let's look at the hard numbers. Now, this data tells a much more interesting story. If you just look at year-to-date performance, Interactive Advisors, with that heavy focus on international stocks, is the clear winner at 9.27%. But now shift your eyes over to the 3-year column. Here, SoFi takes the lead with an awesome 12.42%. Then go out even further to 5 years, and Wealthfront comes out on top. It's just a powerful reminder that who's best really depends on your time frame. So, after digging through all this data, what's the actual bottom line for your portfolio? Let's boil it all down to the key things you need to remember. First, global diversification is not just some buzzword. 2025 proved it's absolutely essential. Second, robos are not a one-size-fits-all solution. You really have to decide if you want that classic passive model or one of these newer, more active ones. And finally, you gotta keep an eye on costs. That standard 0.25% annual fee, that's a huge bargain compared to traditional advisors, so make sure you aren't overpaying. And at the end of the day, as David Goldstone reminds us, the rules for success are the same whether you use a robo or not. Just get the basics right, stay disciplined, and stick to your long-term plan.
And all this leaves us with a pretty fascinating question for the future, doesn't it? As these robo-advisors get smarter and smarter, moving from simple automation to picking stocks and allocating complex assets, are we heading toward a world where the best financial advice you can get doesn't come from a human, but from an algorithm? It's definitely something to think about.